right? It doesn't leave too much room for thinking. Takes the London low below a sell-side liquidity pool, as you can see on the left, and automatically reverses for the London high and the Asian high that has been built up. Once again, I need to clarify this. The fact that we've accepted lower during the Frankfurt session doesn't mean that the Asian high is going to be protected for the rest of the day. You're just simply looking for the midline test, expecting that it's not going to get taken out during the London session. Keys to the Forex daily cycle. This is a concept that I first introduced 2 years ago pretty much to this YouTube channel, and I thought it was a good time to revisit and talked about the major keys in the daily cycle, because there's still a lot of people confused with the intentions and the actual purposes of the different sessions. You can use these timings to create certain trading modules and strategies that you can trade for yourself. And what I'm going to be doing today is guiding you through the main keys and the things that you really need to understand within the daily cycle so you can trade it effectively. Starting off, guys, these time frames here are based on the London time zone, which is UTC +1. You will need to do the conversion to wherever you live. With that said, let's get started with today's fully formed daily cycle. We start the daily candle with the Sydney session, which is from 10 p.m. till 12, and this will be your Sydney session. Now, the purpose of the different sessions is, one, to create liquidity for the upcoming session, or two, to actually create and rate liquidity of previous sessions. And we're going to be seeing this very well in today's session. So let's start with the Sydney session, as it is the first one on the list. The Sydney session usually doesn't move too much. Its purpose is to build up liquidity more than to rate any past liquidity, although we can see in this day that we do end up clearing buy-side liquidity above this high here, which then leads into the Asian session, which once again it's 12 till 6 a.m. in the morning. Now, the Asian session is interesting. More often than not, you will get either the Asian high or low anywhere between 3 to 3:30 a.m. Now, keep in mind the information that I've given you and see how you can utilize this to trade, because it is quite powerful. Now, it's not always the case, but if you backtest the Asian ranges, you will find that the Asian high or low tends to form between 3 and 3:30 a.m. with a very high degree of probability. With that said, we see our Asian range here denoted in green. Now, there's several keys to the Asian range, one of them being the equilibrium point, which is the 50% of it, which is where you see the most of your interactions within the range. And it's a key price point for the upcoming Frankfurt London session. Now, once we've created the Asian range, we can see that we do end up clearing the Sydney high. The Sydney low remains untested here, but the Sydney high is being taken out at that point during the Asian session, because as we said, the purpose of the sessions is to rate liquidity of previous sessions or engineer liquidity for the upcoming sessions. Now, the Asian range develops. We clear the Sydney high, short-term reversal, move back up, move back down, form the Asian low here at 2 a.m., move back up, 3 a.m. comes in, we create a short-term high, although we do spike higher and put in the Asian high at 4:30, which is not usual or typical, but there's always a degree of probability that it's not going to form between 3 and 3:30, between 3 a.m. and 3:30 a.m. So we get in this scenario a 4:30 Asian high. Now, this is where it really gets interesting, because this is where I'm most active in the charts, and these are the opportunities that you can look to be capturing. When we move into the Frankfurt session, more often than not, the Frankfurt session, with a very high degree of probability, will rate the Asian low or the Asian high. We can see over here, and this is one of the keys that you need to take away, that we do end up clearing the Asia low during Frankfurt. We actually extend and accept lower, which if you've watched my previous video, you know what this means. When we raid and accept lower during the Frankfurt session, you are no longer looking for this liquidity pull during the London session. You're now looking for a midline test, which is the equilibrium point in the Asian range. Now, you're looking there for a POI to go short, to go and trade in the same direction as previous market participants in the Frankfurt banks. So we get that exactly happening. We get the Frankfurt raiding the Asian low. Once we understood that, the London session comes in at 8 a.m., right, 7:45, 8 a.m. These minor dead timers between 7:30 and 7:45 are considered still part of the upcoming session. So we see this movement here with the London Open reversing the market, right? Engineering liquidity at the Frankfurt low. And let me actually denote this with a higher degree of precision. Let me zoom in here in the charts. We raid the Asian low once again with Frankfurt. We accept through the Asian low. We then finish our Frankfurt session. The London session comes around and we reverse price straight into the midline, which is once again the very important area that you need to be watching. And what you're doing is you're watching for an obvious POI, order block, naked level, fair value gap, whatever you use to trade. In this particular scenario, we had a stack of confluence here. We had a breaker block right there. This move down, move up, clear through it with imbalance, becomes a breaker. You're looking for this area to go short in this particular cycle. Now, there's obviously different variants. As an example, if the Frankfurt never accepts below the Asian low and just raids it, then you're looking for the Asian high pull during London. What I've given you here, guys, is pretty powerful. You can turn this into a tradable module that can produce a positive expectancy. And this is a topic that we will talk about in future videos as well, because people don't know how to create modules or strategies themselves. They have to rely on other people, which is fine, but you can do this yourself as well. Now, London session reverses straight into the midline. There is a trade here that you can take. Once again, it is the exact equilibrium point of the Asian range. We've rated the Asian low and we've accepted lower, which is the key here. So you know when the London session is reversing that we're looking for a short at the equilibrium point within a POI. You have a breaker with a fair value gap. You have a naked wick here, which I don't certainly know if we reach into. No, we never trade into it, but nonetheless you have more than enough reasons there to look for lower. We carry on to the London session, which is denoted in this slight yellow color, where we simply extend the range lower, right? You could have simply exited this trade here for a high degree and high probability win here, as we could find reversals below the initial London low here. And if you don't want to take the risk, you can look to exit below this sell-side liquidity pool. Now, obviously, this is something that you can answer for yourself when backtesting a module that involves timing, and that's something that you can do. Now, we need to take into consideration previous price action when trading the daily cycles, because we have an obvious sell-side liquidity pool here that the market reaches into during the London expansion phase. We create a short-term high here. Actually, you could look to turn this into this range because there's no higher London price action. And we finish off the range, and the New York session comes in, takes out the London low here, right? It doesn't leave too much room for thinking, takes the London low below a sell-side liquidity pool, as you can see on the left, and automatically reverses for the London high and the Asian high that has been built up. Once again, I need to clarify this. The fact that we've accepted lower during the Frankfurt session doesn't mean that the Asian high is going to be protected for the rest of the day. You're just simply looking for the midline test, expecting that it's not going to get taken out during the London session. As we move into the New York session, which, by the way, you have the timing up here. Let me bring this up to recent times. You can still expect now that the Asian high is a liquidity pool that you can target. So London session low taken out into a market structure shift that you can see with the formation of these candles here. If you jump into a 1 minute time frame, you will see a change in the state of delivery. And if you didn't see that there, you can see it here. We have a big fair value gap with a lot of naked wicks on the left of it, which once again signifies that there is a breaker here. There's a breaker at the London high that we've just traded. We tap straight into it, we move aggressively higher, and we end up the day here because the New York session ends at 9 p.m. London time. And at that point, you're just simply waiting for the next daily cycle, looking at the different liquidity pools, looking to see whether this session is looking to rate liquidity or engineer liquidity and trying to trade based off of it. You can use the different liquidity pools that these sessions provide as targets and entry points. You can use it as both. Now, you have to keep in mind the context of the chart that you're trading, because this, to me, this fractal here that you can see was obviously a bullish pattern. We have sell side liquidity being taken out here. As we do so, we engineer liquidity on both sides and we don't really do much. And now we know that the premise is longs. Why? We have a buy side liquidity pool. You need to remember that the market moves from sell side to buy side. And at that point, it's just simply following the daily cycle. Now, obviously, guys, there's multiple variables of the daily cycle. One that I've just mentioned was the fact that you could be looking for the Asian high during the London session if the Frankfurt doesn't accept below any of the pools. And there's a lot more variables in this. There will be days where the New York session, instead of reversing and going straight to the London high, although that is the most probable outcome, will simply reject at an equilibrium POI as well. You would look for the 50% of the range. You would look to see a fair value gap POI. As an example, we have this one here, and you could have looked to go short there. Now, in this particular day, it's not the profile that the algorithm is in. Why? Because of the context. And that's what I'm telling you when we talk about context. We create relative equal highs on top of the range. When we look at the 5-minute time frame here, this big buy side liquidity pool is relatively higher, high to this Asian high that we see print at 430. With that context and the fact that we've cleared here the sell side liquidity pool, that the New York session, right, which is about to open, has just taken the London low and is showing lower time frame market structure shifts, should determine to you that we're not going to reach lower for this sell side liquidity pool, but we're rather going to be pushing up, looking for buy side. We have buy side here, with the London session being a very big liquidity pool, the London high, obviously. And another thing that I forgot to mention is the fact that the London session rates the Frankfurt high as well into the POI. So that's another confluence factor that you could have had when looking to trade this daily cycle module, which is a daily cycle that repeats both for bullish and bearish expansions, and you can look to trade it. Now, the dead hours between 9 p.m., which is when the New York session closes, and the new start of the daily cycle, which would be 12, here is high frequency trading taking place, which is to say that they're all fighting with each other, trying to make some money with these tiny movements. You don't want to be involved when the market is during these dead hours. I mean, I think it's quite obvious, but there's still surprises me how many people don't know this stuff. You need to make sure that you're not trading when there is no session, because there's no volume. High frequency algorithms are just fighting with each other, trying to make money. There's nothing else going on at that point, and you need to be sure of it. So hopefully this video was educational regarding the daily cycle, and I will see you in a future video.